and welcome to the latest issue of the Wiser newsletter. And this week I'm going to be taking a look at Robinhood, the disruptive and controversial trading app in the United States, and asking the question, are they a good Samaritan or an evil menace? Now, if you like this issue of the newsletter, please hit the subscribe button, hit the notification button so you know when the next video is uploaded. And also, if you're listening to this as an audio blog on the Substack page, please hit the little heart button because that lets us know that you've enjoyed listening to this version of the newsletter. Now, if you think of Robin Hood as the old English character who stole from the rich and gave to the poor, then that's not who I'm talking about. I'm talking about Robinhood, the disruptive and controversial trading app. Now, Robinhood was launched in 2013 when the founders saw an opportunity to disrupt the investment broker market, which they did. Today, Robinhood has more than 18 million customers who are predominantly young men with an average to poor credit rating, and half of them have never invested in the markets before. Robinhood has exploited Silicon Valley's best techniques for engagement and technology addictions. The two big growth areas for Robinhood are options trading and the buying and selling of cryptocurrency. Both are highly risky and both carry the very real possibility of the trader losing all of their money on a trade. Robinhood's founders say they created the platform to, in quotes, democratize America's financial system. Their mission was to make it cheaper and easier for a new generation of investors to begin building their wealth in the stock market. However, as we all see, far from being the people's hero redistributing wealth from the haves to the have-nots, Robinhood are using technology and techniques to trade on a get-rich-quick promise. Now, before Robinhood came to market, there had always been a cost to the buying and selling of shares. Online brokers were usually charging somewhere between $5 and $10 for every single trade. Then along came Robinhood with free trades. Now, free trades are the industry standard, directly as a result of Robinhood's success. This has spurred established industry brokers like Charles Schwab and E-Trade and TD Ameritrade to eliminate their charges too. Now, it is not just the free trades that has made Robinhood so appealing to a demographic that is predominantly made up of young men. The user experience on the app is intuitive and very easy to use. A new user can sign up with just an email address and a few questions. Anyone can do it as long as they have a mobile phone. No experience necessary. Within 10 to 15 minutes, new users are up and running and placing their first bet. The Robinhood app has different levels that users unlock as they start trading. Level 1 is usually just buying and selling stocks. As the user progresses, they move to level 2, which gives them access to options trading. Level 3 opens up access to more sophisticated, i.e. higher risk, investment options. It is this kind of video game aspect that has not been seen before in a brokerage account. And it is this recipe of an easy to use, sticky experience and free trades that has helped Robinhood achieve engagement levels of a top-tier social network. And you compare this with Facebook, YouTube, Messenger, Instagram, and Robinhood has levels of engagement which you see in social media. Now here's the rub. Robinhood places a large emphasis on options trading. Options trading is an exotic and high-risk investment that is different to just buying a stock in a listed company. That's because when you simply buy a stock for the long term, you are buying an asset that will give you a regular return through a dividend and betting that the price of the stock will go up over time. However, the issue with options trading is that you are also magnifying the downside. In the same way that options can lead to huge gains, they can also lead to catastrophic and total loss. But for Robinhood, this emphasis on making options trading seem like a game is working. Robinhood traders trade 88 times the number of options than on any other platform. And although options trading accounts for only around 15% of their trading volume, it is roughly 50% of their transaction revenues. And that's because it's roughly 7 times more profitable. Around half of Robinhood's customers report that this is their first trading account. Now, one of the problems with gamification is that it can lead to addiction, and 23% of men who gamble get addicted. Or worse, in June 2020, a first-time Robinhood day trader called Alex Cairns committed suicide. Cairns was 20 years old and he took his own life after the Robinhood app mistakenly reported that he was down $730,000 on his account. Now, in his suicide note, Cairns said that he didn't know what he was doing and he never intended to take such a high risk. Robinhood did respond by adding more education and support onto their platform. But critics say Robinhood still makes it too easy for inexperienced individuals to trade. And they have a point because Robinhood still has fewer hurdles for options trading than many other brokers. Now you should ask yourself, if the trades are free, but Robinhood's revenue this year is expected to be around $2 billion, where does the money come from? Well, around 80% of Robinhood's income comes from a mechanism known as payment for order flow. This is a controversial practice that is banned in the United Kingdom and in Canada, but is permitted in the United States. Simply, when you or I want to buy a stock, it needs to be matched to someone who is selling a stock. This matching of buyers and sellers is performed by high-speed trading firms known as market makers. Now, the issue for Robinhood's users is that these high-speed traders don't all sell on exactly the same price. The Robinhood user may have a commission-free trade, but if they don't get the very best price when the trade is made, then the deal has actually cost them money. Far from taking from the rich and giving to the poor, Robinhood is moving money the other way. Robinhood's latest bust-up was with the Financial Industry Regulatory Authority, otherwise known as FINRA, and they have issued Robinhood with a $70 million fine. This was the largest fine ever dished out by FINRA and included $30 million in restitution payments to users. Now, FINRA said Robinhood had caused, in quotes, significant harm to its customers, including the enabling of risky trading via options and misleading info around other trading tools such as margin lending. This followed a $60 million fine in December to the SEC for failing to properly disclose its order flow revenue, and prior fines of $27 million and $35 million with FINRA. Robinhood have also disclosed they anticipate paying another $15 million in fines to New York's trading regulator, and that they are currently under multiple separate investigations by federal agencies and authorities in California, New York, and Massachusetts. In reporting the latest fine, FINRA accused Robinhood of, in quotes, systemic supervisory failures and significant harm suffered by millions of customers. The brokerage is alleged to have displayed significantly inaccurate cash balances. For example, Robinhood displayed negative cash balances that were twice as large as they actually were. Number 2, providing false information to customers about the risks associated with options trading. Robinhood told customers that they would never lose more than the premium paid to enter a debit spread, when in reality, many customers did lose much more than that. And number 3, Robinhood issued erroneous margin calls and warnings. Robinhood told customers that they were in danger of a margin call, when in reality, they weren't. Now, the issue for me is that these fines are simply slaps on the wrist, and they are not going to slow Robinhood down given the amount of money that is being pumped into the trading platform. Since 2013, Robinhood has raised a total of $5.6 billion in venture capital. With this war chest, these fines are little more than rounding errors that many commentators see as an endorsement of Robinhood's business practice. Now, Robinhood is making a big move in the crypto trading space. In Q1 of this year, 17% of the company's total revenue came from fees on crypto trades, and 34% of that crypto revenue came specifically from one coin, Doge.
You can't touch this. You can't touch this.
Now, around 9.5 million Robinhood customers traded crypto in Q1, and in the coming year, Robinhood plans to let customers move crypto off and onto this platform and have a full-blown crypto wallet as a gateway into the world of DeFi, which, by the way, is a subject that's going to be coming up on Wiser in 5. Now, this move into crypto is going to put Robinhood into direct head-to-head competition with Coinbase. Now, it's no coincidence that Robinhood are making huge amounts of money from trading options and from trading crypto, because the demographic for its users is the same. And the narrative is appealing to a beat the establishment at its own game tagline that has seen distressed stocks like GameStop, BlackBerry and Hertz, alongside useless crypto coins like Doge, all perform in ways that frankly do not match any fundamentals. And finally, Robinhood announces they're going public. Just as FINRA was handing down the $70 million fine, Robinhood filed its S1 paper for an IPO. When Robinhood goes public, they will trade under the ticker of Hood, which is kind of fitting as it sounds more like gangster than Good Samaritan. And just to give you some headline numbers from the S1 filing, the number of accounts grew 151% over the past year. Q1 revenue was $500 million, up 309% from Q1 of last year. Robinhood is on track to double its revenue to $2 billion this year, ahead of its pre-IPO valuation, which is roughly around $40 billion. There's no question that Robinhood have had a tremendous impact on the marketplace and have brought a whole new generation into trading. But in my honest opinion, this isn't going to end well. But for now, we're still in a roaring 20s post-pandemic bull market, and we're just going to wait and see how that pans out. I hope you've enjoyed this issue of the Wiser newsletter. If you have, hit the subscribe button. And if you're listening on the audio blog, hit the heart button. Remember to leave a comment. Have a look in the comments below to see any links that I put into the article. And until next week, remember, inside information gives you leverage.